figure out the right people, then figure out how to kind of get on their radar and then nurture those relationships. I mean, the pitch deck is the workhorse for the fundraise, right? Whenever you're going out to talk to investors, you're competing basically with thousands of other startups. Your story has to be in that 1%, echelon to get funded.
Okay, we are here today with Nathan Beckord. Nathan, how you doing?
Very good. How are you?
Good. I am excited to have you here. I have been aware of Foundersuite for years. I think this is going to be a really fun conversation. You have your own incredible founder story with a VC-backed company. You've got a podcast that's amazing, How I Raised It, which is just such a great podcast. Anybody who's raising money should be listening to that for sure. And then you're the founder of this platform, Foundersuite and Funding Stack. And absolutely incredible to read that you have helped over 100,000 entrepreneurs and raised 21 billion. Is that correct?
Yeah, that's a big vanity metrics, big vanity numbers. Yeah.
Hey, you know what? They're pretty amazing. So I would own it. That is incredible. Congrats. I mean, that's a lot. That's a big impact you've had. That must be very exciting. How long has Foundersuite been around?
We're going on 10 years. So we incorporated in 2015, launched the first product about a year later, 2016. But it kind of depends on when you start the clock, right? I had been working on it as kind of an idea for a year or two before that. So, about 10 years overall. Yeah.
Wow, that's great. Very cool. Okay, I want to get into Foundersuite because there's so much good stuff there. I think anybody raising money should be on that, obviously, and we'll explain what all that is. And sounds like you guys have a new feature that tackles a extremely challenging part of the fundraising process. So I'm excited to hear about that. But I first wanted to pick your brain on just kind of the overall fundraising landscape and what you're seeing out there. Obviously, there's a lot of change in political environment and all that stuff. And just curious, have you seen shifts? Are people getting funding? Is it more challenging, less challenging? Obviously, AI is a trend, but just what's your perspective on the overall landscape?
Yeah, it's a great question. I say this kind of a lot. I'd say if you're not a hot AI startup, it's actually pretty hard right now. 2024 was a hard year for a lot of startups. My data is kind of anecdotal to a degree, but I mean, we talk to a lot of our customers and a lot of them are struggling. We have a mini little exit interview when people cancel our product or churn out, right? Like, why are you churning? And a lot of times it's like, hey, I've been trying to raise money for 8 months and I'm getting nowhere. I'm going to take a break and come back to this later. So, I mean, I feel like it's a pretty tough market still, unless you're a hot AI startup, but for everyone else, it's challenging. However, I'm kind of optimistic about 2025 as a year to raise money. I think the change in administration, like politics aside, I think it actually will be probably pretty good for the private capital markets and the IPO market, right? I mean, all these things are connected. If the public markets are doing well and the IPO market's doing well and companies are finding exits by going public, then that encourages investors to pour money into startups to feed the earlier stages, right? So I think any improvement in the kind of IPO market will pull up the venture capital and early stage funding market. And we published some little thing in our newsletter a few days ago, how, the sentiment seems to be pretty positive, that we're kind of hit the bottom and now we're, back to another upswing. And I've been doing this forever, for a couple decades, and it's always cyclical, right? You're always seeing these cycles of boom times, tough times, boom time, right? And so it's just like, where are we at in the cycle? And I feel, to answer your question, really, that we're kind of probably at the start of a new upcycle. I'm hopeful too.
Yeah, that's great. Yeah, it's funny that you say 8 months. It took me 18 months to raise my first round of funding. So I'm like, 8 wouldn't be too bad. But Yeah, I think it is that it just takes a lot of persistence, right? And it can get challenging for sure. It can get tough. So what would you say, what actually real quick, what percentage of users on Foundersuite are kind of seed money pre-seed? Would you say ballpark? So
Probably at 50% or maybe even a little bit more are pretty early stage. Seed, pre-seed, angel, these things all kind of get mixed and jumbled up, but that sort of early stage is the big bell curve of users. And, but we've had users on that have gone on to raise Series A, Series B, even up beyond that, raising big $100 million rounds. Those are few and far between because there's kind of a natural winnowing out at each stage, right? But yeah, majority pretty early stage.
Yeah, that's great. And then, okay, so tell us a little bit about Foundersuite. Obviously, it's never too early to start looking at who could possibly fund you. And what I'm curious about really for, people who are in that, have never raised money before, are in that early stage. I remember I used Angel List like way back. And I think you guys are similar, but more robust, obviously. And, at this point, especially. But tell us a little bit about somebody who's never raised money before. What would they do? How is Foundersuite going to work for them?
Yeah, it's spent a lot of time thinking about, how does fundraising work? What's the ideal kind of process for this, right? And step one is always identifying a target list of investors, right? You want to go raise money, you've got to figure out the 100, 200, 300, whatever the number is, best fit investors out there in the universe. And obviously I'm pushing Foundersuite to help do that because we have a database of 227,000 investors that you can go search in. But I mean, realistically, most people will use, they might have already built a list. So they'll bring in their list of investors. They'll import a list. They'll spend some time searching our database. A lot of times people will browse around on AngelList, Crunchbase, Signal. I mean, there's tons of places to find investors. But, by hook and by crook, by looking around, you want to really spend the time researching investors, finding those 200 or so that do your type of deal, your industry, your stage, your geographic location, other kind of criteria. Then once you built that list, and, in our system, that would mean building it in the CRM. So creating a pipeline of investors. Then it's a function of like, all right, how do we start to build relationships with these investors, right? How do we get on their radar? How do we get in touch with them? And ideally, you start this process even months, even up to a year or so before you actually plan to raise money. There's, I say this all the time, but investors invest in lines, not dots, right? They don't just meet you and write a check. I mean, that does happen, but it's rare. Usually there's a relationship building process that happens, first. So that's kind of the next step. All right, how do we get in touch with these folks and how do we start to build a relationship and get them to know us? And I'll pause there. I mean, I could go on and on about, all the steps, but that's kind of the first two steps, right? Figure out the right people, then figure out how to kind of get on their radar and then nurture those relationships. I'll pause there. So
yeah, no, it's great. And so I logged on last night because I just wanted to kind of see the platform. And I think, the way everything's laid out and the fact that you can filter by industry you're in is incredible. Because when you say over 200,000 investors, and that's angels and VCs and angel groups, right? Every type of investor you have kind of in there. Is that correct?
Pretty much every type. Yeah. We've got angels / high net worth, rich people, basically, venture firms, family offices, even some like corporate VCs, angel groups, accelerators, and then some other investor types that probably aren't quite as relevant for early stage, like foundations, endowments, trusts, LPs, things like that. Those are more like, for different types of companies. But yeah, pretty much the whole spectrum of investors.
Yeah, and you can just filter by what you're looking for. I mean, it feels really easy to kind of narrow in to a few hundred, like you said, and then do some background research on those, see which ones might align with your company. And that can give somebody a starting list. And that's like a free account right there, right? And correct. So anybody that is like even thinking about raising money should at least that's such an incredible resource to be able to get on and do that. That's amazing. So tell us a little bit about once you have your list, and I'm curious too what you're seeing. When I was raising money, it was a lot of in-person meetings. It was getting on a plane, flying to go see people. It can cost some money just to even do that part of it and the time and effort. Are you seeing people still do that, or is, Zoom sufficient to meet with an investor a few times and they get to know you? And I'm sure it depends on like what the dollar amount is and all that good stuff. But what are you seeing in terms of what it takes to connect with that lead on your platform and then to build that relationship for them to be able to make a decision one way or the other?
Yeah, it's such an interesting question because it used to, even not that long ago, 10 years ago, everything was done in person, right? I mean, you had to get on a plane, come out to Silicon Valley, Sand Hill Road, go to New York, wherever it is, and go meet with investors. It changed. It was starting to change. And of course, COVID totally changed that. And everything for a while was done on Zoom. Now it's kind of a hybrid. So it's kind of a funny world right now. Like, it's definitely way more efficient for both you and the investor to do it on Zoom, right? You can pack in, I know people who will pack in like 12 Zoom meetings a day, right? They're pitching 12 investors a day over Zoom because they can do that because Zoom is very efficient. I am maybe just old school. I still think there's a huge benefit to getting in a room with someone or going out for lunch, getting a coffee, going for a walk. I mean, there's all kinds of, to kind of just build that more personal touch. So I guess if I were raising money right now, I would probably have a lot of first round meetings over Zoom, right? Really just pack my schedule. And then, and let's say that's 200, right? Let's say I'm targeting 200 investors, have a lot of those over Zoom. And then for my sort of second round, I'd fly out and meet folks, right? You want to have that personal connection, that bond. You want to get that gut feel, good vibe from sitting there, which is really hard to do on Zoom, right? I mean, I can get a feel for you on Zoom. I can make some judgments about you, like looking at, you and your background and all kinds of stuff like that. But there's just such a difference. You're going to be with this investor for the next several years of your life, having board meetings, working with them, leaning on them. You want to just have that sort of that chemistry, which I just think is hard to get on Zoom. So that's my answer. Maybe do the first round or two on Zoom and then get on the plane. And just to finish on this topic, if you're not based in San Francisco, Silicon Valley, New York, I see a lot of people, they'll schedule a week or they'll block off a week and just pack their days full of meetings, right? They're like telling investors, I'm going to be in San Francisco, February 14th to the 28th. You're on my second round. Like, I want to move to the next level with you guys. Can we fit something in? I'll work around your schedule. Boom, right? And just pack your days full of live pitch meetings. Yeah.
Yeah, that's actually a great way to get that second meeting too, because they feel like, oh, you're just here for a week. Okay, I'll squeeze it in, versus they could put you off for another few weeks. Yeah, that totally makes sense. I think too, I could see if, 80% of people are just trying to do it all over Zoom. If you're the one who makes the effort to go and set up the in-person meeting, right, that's going to nudge you further up their list of, potentially investing. So
exactly,
smart
you want
move.
to show that hustle. Totally, you want to show that hustle. You want to show that you'll do what it takes to get the deal funded, because that's a good signal for you'll do what it takes to get your startup succeed, right? I mean, I'll tell you one tiny little story. Our venture firm that ended up investing is based in New York. And I remember it was maybe one of the first or second pitch meetings. The partner, who was a decision maker, only had 8 a.m. East Coast time for the meeting. And I'm in San Francisco. So you can do that math. What time is that in San Francisco? That's a 5 a.m. pitch meeting. And I remember just setting my alarm for like 4 a.m., making the biggest pot of coffee ever, and like getting on the call at 5 a.m. West Coast time to have that pitch meeting. But I didn't want to reschedule that. I didn't want to be like, oh, that's too early for me. Can we book a couple weeks later at a more convenient time? No, just get up and have the pitch meeting. Right? Yeah.
Totally. Put the game face on, make it happen. Okay, so in terms of Zoom meetings, this is something I do not have experience with. What do you recommend? Any like tactics for pitching over Zoom? Because to me, that seems, I guess it's easier in some ways because, you're behind your computer. You could probably have notes up, right? Versus in person. But again, it's really hard to read and get that same kind of dynamic going. Any recommendations for people pitching over Zoom in that very first intro, pitch?
I think so you're right. From the founder side, you can have your notes with you. You can have, stuff to kind of prepare. On the investor side, they can also be reading an article while you're pitching. Right? So, they can be distracted easily. They could get a notification, an important email came in. So you're fighting that attention deficit disorder even more so than when you are in person, right? And so I think pitching over Zoom, you've got to be a little more memorable. You've got to kind of create a little bit more of a pop or impression to the meeting so they remember you and you really capture their intention. Now, what does that mean? That can mean all kinds of different things. It could be starting your pitch with kind of a emotional story about the why are you doing what you're doing. It could be started off with a really cool demo or something. I mean, there's all different ways to kind of create that. But I think the bar is higher when you're on Zoom. You've got to be more memorable and create more of a pop. One thing I do like to do when I'm on a Zoom meeting, actually this goes for both in-person and Zoom meetings, is I like to push it back to the investor and be like, hey, thanks for your time. Just to confirm, we've got half an hour. I want to make this. How do you like to do these? Do you want me to walk you through my slide deck? Do you want me to give you a demo? Or do you want me to just kind of share my story and what I'm doing here, right? And we can just have a conversation. So actually, I like to give the investors kind of a multiple choice of how do you like to run these? And then obviously tailor it, be ready for all three of those scenarios and tailor it around. I think that's pretty effective too.
That is great advice. Yeah, I could definitely see that. And yeah, that puts them on to, okay, I guess I better listen since I'm choosing what I want to hear. That totally makes sense. Okay, so tell us a little bit about this new feature on Foundersuite that you mentioned kind of addresses how to get that intro and that warm lead. I'm really curious how that works.
Yeah, we've been ever since day one, 9 years ago, we've been thinking like, all right, what does a typical fundraise process look like? And how can we kind of help make each step in the process a little more efficient and build tools to do that, right? And we've been doing that, right? Even just providing the database makes it easier to find the right investors. Our pitch deck hosting and investor update tools are good for the marketing and sending out materials, all that good stuff. One of the hard parts that was missing, or one of the gaps, was this intro piece, right? Kind of in between once you've built your list and when you're actually sending them out the pitch deck and stuff like that. There was that, how do we find the right connection to each investor? And a lot of times I would have to direct people to go offline, go off our platform, go spend, hours on LinkedIn, kind of looking up every investor and seeing how you're connected to them, if you have any mutual connections, all that stuff. So finally, we brought this in-house, and it's called a Get Intro feature. And it basically is something that will scan your LinkedIn network as well as your contacts in your contact book and your calendar, so people you've met with in the past. And it basically creates kind of a social graph or connections graph, to help you figure out how you're connected to all these investors, first, second, third degree, stuff like that. And it kind of shows you a little context of, different intro paths, because you might have a few different paths to each person, kind of a little signal strength around that, right? Because some people you might, not only do you have a good signal strength to your connector, but also how does that connector have a good signal to the investor, right? Did they work together in the past, or are they just LinkedIn connections? And so it's kind of mapping that whole social graph and signal strength, if that makes sense. And then it basically facilitates you asking for that introduction with some templates. Like, if you're my connector, hey, I see you're connected to Mike Maples. Can I lean on you for that intro? And boom, so just making it more efficient to both find the right person to ask for the intro and to actually make the intro. It's kind of simple, but I mean, that's what it does. And it's actually pretty powerful.
That is super power. Yeah, that's insane. I can't believe that. That saves so much time and effort. That's amazing. Yeah. And getting the intros is huge. I remember just even using Angel List. It was more of just a cold outreach, and you got to go through a lot of people to get people to respond. So that's amazing. And I think if I was looking at the pricing, it's actually really reasonable, the annual. I think when I first looked at it, I thought the annual cost was the monthly cost.
Oh.
And I still thought it would be worth it. And then I saw, that's an annual cost, actually. That seems totally worth it. So
interesting.
That's very cool.
Sounds like we need to raise prices. Yeah.
Very cool. So what would you say in terms of like materials, are people, I think this is a big one, because it took me so long to raise money. I was in a recession. I had a lot of things working against me at the time. I, had all my materials so dialed. What do you see as people needing, to raise money right now, if they are kind of seed or pre-seed? How thorough, how in-depth do the materials have to be? Like, what's your take on that, or what are you seeing?
I like, it's funny because way back when in the 2000s and even a little bit into the 2010s, I used to write business plans for startups. I was charging, $8,000, $10,000 to write business plans. No one does that anymore. So that's good, right? I mean, the pitch deck is the workhorse for the fundraiser, right? In your pitch deck, I almost say two different versions. You need what I like to call a teaser deck. And my favorite format is basically 5 slides. So it's problem, solution, market, traction, team, right? Problem, solution, market, traction, team. And that's enough about your business. It says what you're doing, what the market is you're going after, the market size, all that good stuff, the stage of the business, that's traction, and who you are, right? That's the team slide. And that's enough for investors to kind of get a feel for, is this someone I want to spend more time with and take a meeting with, right? So I love the teaser deck as a way to kind of break the ice, qualify investors. It's a way to get them to sort of, okay, yes, let's move on to a full meeting, or no, this is too early or just not in my space. And then for the full meeting, I like to have the full slide, which is basically the same slide, but with more sections. Like you'd have a go-to-market plan and maybe a competition slide and, more stuff. I mean, there's lots of formats and templates out there, Sequoia and stuff like that. You can Google to find the 10-slide format. And then, also having a decent number of appendix slides. I really like to have a tight deck, 5 to 10 slides, max, but then you can have appendix slides to answer questions. I always tell founders, bring someone with you the first couple of meetings, or have them off camera if you're doing Zoom, and just write down all the questions and then make, appendix slides for that. So that's the deck. And the deck is like your workhorse, like I mentioned, right? I like to have a financial model, right? If I'm asking you for money, I should be able to articulate very clearly how I'm going to spend your money, right? Like if I can't answer how I'm going to spend your money, then you're going to think I'm not credible, and why would you give me money? Right? And also showing what the business model looks like, at scale. That's a good thing to have. Now, some people will do like an information memorandum, which is kind of like a business plan, which is funny, right? It's kind of like the old business plan of yesteryear, or a one-pager tear sheet. That's always nice, just to have a little one-page doc that's, kind of written stuff. whatever. Sometimes a little prepackaged demo video that doesn't get used that much. I like to do demos live versus prepackaged. What am I forgetting? I mean, those are the core things, right? Teaser deck, full deck, financial model, maybe a one pager. Was there more to the question? I'm already forgetting.
No, I think, yeah, no, that's it. Are you seeing investors, or are you seeing people go with kind of what they're looking for funding and what they want structure wise? Or are they using your platform to find a lead investor who can basically help set those terms? Are they leaving that loose, or, at that seed stage, are they going in with like pretty set, here's what I want, here's what we're looking for in terms of structuring it?
Yeah, I'm going to give you like conflicting answers. Yes, I think it's good to go in knowing what you want, right? I'm raising $1 million. I'm going to spend it on, this much on engineering, this much on marketing. Here's my marketing plan. And here's where it's going to get me. In 12 months or 18 months, it's going to get me into 4 cities and, 3,000 users, whatever, right? Kind of knowing what you want, what you're going to do, having a very clear roadmap. Now, the conflicting answer is sometimes you might actually have 2 versions of that story. One when talking to angels, and maybe one when talking to a little bit larger venture funds, right? Maybe there's the $1 million plan and then the $3 million plan, which you can tweak a little bit depending on what you're talking about. Because if you're talking to a larger fund, they might want to put $3 million in, not $500K or $1 million, right? So you can tailor that message. You still should be pretty clear about why you want that amount. It's kind of like medium scaling, big scaling, right? And you could also argue that, like, hey, if you're raising $1 million, that's only a stepping stone to the next round. But if you're able to take $3 million now at favorable terms, now the term part, like valuation and all the terms, is the other equation. How much you're raising is one part. You should have a sense for valuation, what you're expecting there. They might ask you, like, okay, you're raising $1 million. What's your expected valuation? And you should be able to say, I'm targeting $5 million pre-money, whatever your number is. There's more art than science to that. And then terms, you need an attorney. You should be familiar with all the different terms in the term sheet, what all these things mean, because you don't want to get into a deal that has a nice valuation and good money, but terrible terms that are going to make future fundraisers hard, right? So,
yeah, okay, that makes sense. Yeah. Okay, you mentioned a backdoor way of leveraging investor updates to avoid a lot of pitching and hustling. What is that all about?
Yeah. Okay. I love the question. So it goes back to something I said sort of 10 minutes ago, where once you've built a list of investors, in a perfect world, you've started this process a year before you actually plan to raise money, right? No one does. Not that many people do this, but people should do this. And even if you don't do this for your seed round, you might think about it for your Series A round. So it's never too late to start this process. So the process goes like this. Let's say you built a list of 200 investors that look really good. They invest in your type of deal. Now, reaching out to them with something I call a permission email, basically saying, hey, I see that you guys invest in, SaaS startups. You're pretty early. I've been a fan for a long time. I see your investments in XYZ, right? Show them that you've actually done your research a little bit. Then say, I'm not raising money right now, but I plan to be raising Q4 or early Q4 or late Q3, right, of this year. And I'm building something pretty cool. I think it's right in your sweet spot. And here's a little teaser about it. Can I have your permission to add you to my company update list? We send out a monthly update once a month to some of our advisors and people like that. Can I add you to our distribution list so you get a feel for what we're doing? You can get a little early look at what we're building, right? My phrases are early look, sneak peek, right? Put those words in there. Because investors love to get early access to deals in the thought that maybe this is the next big thing, and you're offering them early look at it. And then you start to send out that update regularly, once a month, every month. They get an update from you, and we can talk about what it should contain. But basically, they're getting that update from you. And let's say you're planning to raise money in October of 2025. You keep sending this now. We're recording this in January, so January, February, March, April, May, June, July, August. So they're getting like 8 or 9 months of these. They're seeing your progress, and then in that, call it September update, top of the thing saying, hey, we're going to kick off our seed round October 1st. Let me know if you want early access to our pitch materials. And I've seen deals that actually get kind of taken out before they even go out pitching because they've nurtured these relationships for 10 months. And the investors have been following, like, this is cool. You guys are making amazing progress. I like it. I like the progress. I like what you've shown me over 10 months. Let's do this, right? It's kind of a crazy funding hack.
So
right?
smart.
Does that make sense?
Oh, absolutely. Absolutely. Yeah. Yeah. And a lot of times too, I think if it's between, an early round and a next round, sometimes it's just the timing is bad for someone. And then 6 months later, the timing is good for that investor. So I think, yes, showing progress, or maybe you just hit that one milestone that was important to them. And then they're like, hey, I'm interested or whatever. So yeah, I definitely could see that being pretty powerful. What are you like? You're an investor. You're seeing lots of, people get funded. What would you say are the biggest red flags that just stop someone in their tracks and say, nope, not for me?
Yeah. It's so much of it is, I guess it's not exactly a red flag, but sometimes, you'll get a pitch deck coming in from the founder, from the intro, whatever. And it's just like, I can't understand this. And I don't have half an hour to try and decipher this. And I'm not going to go ask the founder to explain it all. It's like, I'll skim that teaser deck, right? I mean, usually it's not a teaser deck. Usually, I guess the red flag is, in that intro or even those early points of the conversation, it'll be too much information and a really confusing story. Investors all have ADD. You have to just sort of think of it like peeling the layers of the onion, right? That's why I like the teaser deck. It's 5 slides. If they don't have the attention span to look at 5 slides, that's really extreme ADD. But that's probably one of the biggest ones. Like, the story just doesn't make sense. It's not clear. It's confusing. It's complicated, right? You can't have confusing or complicated. It just won't get any attention, and therefore it won't get any, go anywhere. I think sometimes, I guess another red flag is kind of just founder personality. Either they come on it's like Goldilocks. Either they come on too strong, or they come on too weak and passive, or too like polite and like, oh, is there anything I can do? Like, no, just be confident and bold without being like too pushy, right? There's this Goldilocks zone of being like bold and confident without being overly pushy and aggressive.
Yeah,
and that's hard to coach people on. I don't know if anyone does that, right? It's just, it when you feel like this guy's way too, yeah, right. Those are probably two of the biggest ones, right?
Yeah, no, it makes sense. I think with the slides, I was going to say that I always say, like, the goal is just to get a second meeting. You don't have to throw up all the information in the first, meeting, because that you're just sparking interest and just trying to get them excited. And yeah, that simple and clear is key there. Okay, tell us quickly, or not quickly, but a little bit about your story and kind of what's on the horizon. Obviously, you've done, built an incredible platform and community and company. And what are you looking forward to in the future here? I'm kind of curious, and your founder story, just from your perspective.
Yeah, my founder story is very simple. Out of college, I moved up to San Francisco from Santa Clara, and started working in investment banking during the go.com boom days, crazy late 90s. That dates me a little bit, but it was crazy town. Just the all these .com startups forming, raising capital, going public in like 6 months. It was just like craziness,
Wow.
right? That
That's crazy.
probably
Yeah.
will never happen again. Although the AI boom is, has some parallels. Anyway, so I got my start like working with startups that were going public, and I was covering them as a research analyst, and stuff like that. And then spent a little time in New York working in JP Morgan's private placement group. So that was helping a little bit later stage companies raise capital. And then I just moved out to, back to San Francisco after grad school. And like, all I know how to do is raise capital. So let's work with companies doing that. Worked with quite a few companies for about a decade, just helping them raise capital, right? And a lot of times, like if you were my client, you would come to me and I would help build an investor list. I'd do all that research, put them in a fancy spreadsheet, and then kind of coach you and sometimes even, go down and help pitch with you as acting fractional CFO, right? So I did that for a while, just kind of helping companies raise capital. And then basically had the idea, it's such a tiny light bulb, but the light bulb was like, why don't we make some software for this, right? And so that was, why don't we replace the spreadsheet with some software? And that was what led to Foundersuite and our first product, which was Investor CRM, and we expanded on it. So that's sort of the backstory. Pretty straightforward. And then, going forward, trying to figure this out because it's not a fully baked concept yet, but AI is going to change things, right? It already is. We integrated a ChatGPT integration into our email tool to help you like build more, robust emails to investors, things like that. That's just baby steps. But I think there's a lot of opportunity, right? If we, again, go back to what I said before, think about all the steps in the process of raising capital. And even though we're solving some of it, it still can be painful and tedious to figure out the right investors. I think AI can help us build you that target list quicker, faster, with more, in-depth research on investors. That's something we're looking at and building. And then just AI, right? It's like, I know it's just such a buzzword, but like, I think AI has a lot of potential to just improve the fundraising process by finding the right investors, helping you craft messages to those investors, and just kind of, you still got to build a personal relationship, but AI is going to solve some of those tedious, laborious parts of it.
I don't know. It's crazy. It's the more and more I start just expanding using various AI tools, it just blows my mind. It's crazy. It's incredible. What are your thoughts on kind of a lot of the AI startups out there right now with the new DeepSeek thing that just, came out in China, and that being such a lower cost? I don't know. Are you seeing that impacting a lot of the AI startups that are going after funding and the amount of money they're going after? Or does that prove like stuff can be done cheaper? I don't know enough about the space, but I was just kind of curious about that because I know so many companies have poured so much money into AI.
Yeah. I don't know. I think it's too soon to tell. think about every industry, right? Over time, the costs go down. It's like Moore's law and stuff like that, right? It's just, and building AI stuff is extremely expensive currently, but that's going to go down. And I think that's a trend that's just happens repeatedly. I don't know. It's a good question. Like, is it going to be, is going to take out some of these overfunded or heavily funded companies? I don't know. I don't really have a crystal ball into that. It's a good question though.
Yeah. The crystal balls would be so helpful, wouldn't they? Amazing. Well, this is so great. I could pick your brain for hours. Anything else that, you think would be just any recommendations for people who haven't raised money before, like number one thing they should focus on or do to just make sure? I believe where there's a will, there's a way. And if you push long enough, you can do it. But any thoughts on, advice for the early stage newbie?
Yeah, we've covered some of it, but I'd say obviously starting this process early, even starting this, well in advance. I mentioned starting that process like 10, 12 months before, but I know people we've had on our podcast who even start building investor relationships before they even have a startup, right? I know one founder, I can't think of the name right now, but he got a job in a bigger startup, and kind of specifically when they were going out to raise some more money, he went to the CEO and said, let me be your wingman. I'll do whatever it takes. I'll help you, research investors. I'll be your calendar admin. I'll do whatever it takes. Let me just kind of shadow you on the fundraise. I'll do all the grunt work. And that person, obviously got to know a lot of investors and understood how the whole process worked. And then like 2 years later, when he started his own startup, I wish I could remember the name. When he started his own startup, he had already built a lot of investor relationships that he could then call on. Hey, I used to work with so-and-so over here at this company. Now I've got my own startup. That's going to open the door right away, right? So the further advance you can start to think about building relationships. And then I guess the only other piece of advice, which again, we kind of already covered, is getting that story really clean, right? Get some people to coach you. Maybe it's a communications coach. Maybe it's a graphic designer. Maybe it means joining an accelerator where you're, practicing your pitch to a dozen mentors, whatever it is. Just make your story so crisp. You have to have that. The competitive level. Think about this. Whenever you're going out to talk to investors, you're competing basically with thousands of other startups. Your story has to be in that 1%, echelon to get funded, basically. Right?
Yeah, that makes sense. Yeah, you got to go above and beyond. It's put the effort in. And I think, like you said earlier, just showing that you're willing to do whatever it takes goes so far. And showing you put in the effort, you're not just winging it and just kind of go with the flow. You got to put the effort in. So that totally makes sense.
Yeah.
Amazing. Well, we will put links to Foundersuite. And then we didn't mention Funding Stack, but I think this is mostly for, entrepreneurs. But that's basically for your investors, that the investor half of Foundersuite, right?
Yeah, Funding Stack is our new baby. It's for two use cases: emerging manager VCs, because if you're a new venture fund, you've got to go out and raise your fund, just like startups have to go raise money. They have a different investor set, mostly LPs and family offices. So, it's the same typical process, a little longer sales cycle, but, similar. So that's what Funding Stack is for. It's also for fundraising consultants and like investment bankers. If you're helping companies raise capital, check out Funding Stack. So definitely, yeah.
Very cool. Love it. Amazing. Okay, yeah, we'll put links to everything in the show notes. And thank you so much for taking the time. So great to connect. What an incredible platform you've built and helping so many people. I so appreciate all the knowledge you shared.
My pleasure. And I really appreciate coming on the show. I appreciate that.